So I wanted to get on to Bitcoin here. So Bitcoin is stuck nearly 20,000 and looking for a surge in volatility. This is a title from Barron's this morning that came out. Jaime, feel free to share my screen there. Here, one thing that I thought that stuck out to me, and I want to get your guys' thoughts on this. One comment that kind of stuck out for me in this article was that Bitcoin's ability to build on gains will depend on the potential for further weakness in the economic data this week, which I thought was interesting because Bitcoin's been following, with the exception of the month of September, following the market for the most part, and also quoted as saying that Bitcoin has shown resilience to sell-offs, though, so a failure for the data to deliver could see it well supported. I'm interested to hear what your guys' thoughts on this, because up until the last month or so, economic data has influenced the movement of Bitcoin, and the overall market has influenced the movement on Bitcoin and tech in particular. So if economic data comes out weak, do we see a surge in tech, or is it just Bitcoin? Why would a comment like this be made?
I can start with this and done. I'll start with my rainbow shit.
Appreciate it, Jaime.
Yes, and then you can take it to the professional level, Don. The comment in that article you were mentioning, Brad, is the fact that it's coiling, it's consolidating. It seems to have stayed in a position, and usually that's a sign of market volatility coming in. Looking at it as a chart, this candle right here is the month of September that we just witnessed, where it had a slight rally and it just held this line, this Fibonacci line, as support. At this moment, we're lifting off from it. I don't much look at the news themselves. What I'm looking for here at this moment is, okay, what is it going to do? Will it come back up to the 23,500 level where that resistance Fibonacci is holding? Or will it bounce off of it, or will it just turn around all of a sudden and drop below? We don't know yet. So that's what we're supposed to be watching. And on the monthly level, this is where I'm at now before I pull any triggers, is the 50 moving average. So now I just moved from the weekly to the monthly. On the monthly, we have the 50, this green 50 moving average. If we break it and test it as support, meaning we cross this candle, becomes a nice green dildo, and we hold 22,300 as support, in my opinion, in my own research, I would say, okay, we have seen the bottom. We can continue moving north. If we do not reach it by end of October and we stay below it, I believe we would now reach down to the next support level, which is around 13.5, 17,000 and 13.8, with some wicks, some nice little profit wicks available.
It's about like the 11.8 mark?
Yes, sir. Maybe 11.7, to be honest with you.
Just to be clear, below 12. Okay.
It ain't gonna be 10.
By the way, for all you viewers who have not been privy to this, there is an open, I don't know if it's a bet or a challenge between Tamp and Don. 12,000 is the floor. Don Franz says 11,008. So anywhere between 11,008 and 12,000, if the price range is there, it's a tie. But if it stays above 12,000, or if it goes below 11.8, Don Franz is on the 11.8 camp. Tamp is on the 12,000 camp, where it stays above it. So it's going to be exciting times, guys, pretty soon.
But when the market goes sideways like this, a lot of people get antsy. You know, we don't need to worry about this at the bottom or the top. You know, I don't think it is at all. But the longer something stays somewhere, someone feels like a decision has to be made. And then so it's like, this could be the bottom. The longer it stays sideways, it goes, this is the bottom. It's for sure the bottom. I'm buying, I'm loading up. Like, your decisions just get more and more, and it hasn't done anything at all. So this is where bad decisions get made. Like, you can wait for a break and then buy it. Like, you can just wait for a breakdown and watch it go to my $12,000 mark. You know, if we look at it there, if we do zoom out, this is largely just going sideways. On the daily back and forth, we're seeing some volatility, and people are getting hyper focused on these little tiny moves. Bitcoin going 10% in 15 minutes is like a normal thing. We haven't seen that in a long time. This characteristically is just Bitcoin going sideways, you know, waiting for the next thing. The next big run, I think, on Bitcoin is going to be when the dollar fails. There will be a hedge against the dollar. That's what Bitcoin was the last time, or it's the reason I got in it, at least. Coincidence or not, that's when the dollar started selling off, Bitcoin started going up. Dollar's going rampant. It's about halfway to the all-time high mark. We're at some serious levels now. But should the dollar break up and continue higher? Well, actually, I don't know on this one, because the dollar continued going higher and Bitcoin quit going down. But I do think on the way down, Bitcoin, possibly even, I know you guys don't want to hear this, gold, I think a lot of people will be looking as a hedge against the dollar. And I've been very serious on my streams about this. Like, one of these two need to be on your watch list. I think Bitcoin's about to fool some people. There's articles like this coming out, and I think Bitcoin's going to pop up, and people are going to think, oh my gosh, green candle, it's up. and they're going to get excited, and they haven't zoomed out just to see this isn't really anything for Bitcoin. They're forgetting what Bitcoin truly is. Like, until this thing is regulated, Bitcoin is still the Wild West. Like, it's still us controlling the price and the movement of it. So after regulation, then it'll look like most other things. But until then, Bitcoin can move some dollars, and it's not moving anything right now. These articles, I think they're just getting people excited with it.
I love
And
it.
I would just pump the brakes on the excitement, not to rain on anyone's parade, but
No, I
No.
think you're dead on this one, Don. I'm in 100% agreement with you. And I actually do encourage people, if they're looking for a hedge against the dollar and gold is where you're comfortable in going, then go ahead and go to gold,
Yes.
but don't just stop there. Why do I say that? Because if you understand why you're in gold and then you continue to look at why people say gold and Bitcoin, then you'll inevitably search or learn more about Bitcoin, and you will see why Bitcoin is better than gold, and you'll feel more comfortable about putting some of your money in there until you're all the way comfortable with it. So I'm okay with stepping stones. I think they're necessary. So go ahead and hedge gold, but just don't stop. Just look at why people say gold and Bitcoin.
Just don't do wait and see. Actually get engaged, do your research, do something about your own and your children's future.
I think that the answer to this lies in the dollar. When that makes its final turn, not a red candle on the daily, like when that makes its final turn, that trend changes, that's when we're going to know who's right between me and Tamp. Like, that's when we're going to figure out all the answers.
I agree. That's why I mentioned, I think I was on Own the Chaos a couple days ago, and I mentioned that if there is some sort of international agreement to stop rate hikes for the moment, I think we're going to see some massive candles. And I called that, and Don, you're backing me up on that. I mean, it's just, if you have to stop the currency basically for whatever reason is, you're going to see some massive candles on hedges.
If we throw in there the OPEC Plus decision, where they are reducing production and raises the value of oil, we have to look at how that fits into this whole picture also, besides the interest rates. So there's a lot of things in the world coming to a head that affects the dollar itself and also affects the global economy.
Where did this rumor come from about the whole we're going to stop rate hikes?
It came from, what
The
is
UN.
Credit Suisse? Yeah, the possibility that they were insolvent and would come insolvent if the U.S. didn't stop raising their interest rates. So there was a rumor, and rumor only, that if there was some sort of international agreement to halt rates for the moment, we would obviously see some massive moves in the market from that. But nothing has formally happened. This is all speculation.
Well,
Yeah.
the EU has also
That's right.
put pressure on
Yes.
the US for that.
And United Nations also, through the United Nations, saying, guys, slow down the high rates, because there's capital flight at this moment out of everybody else's, from their fiat to ours.
Credit Suisse can get wrecked, though. It's ran like a kid in a $200 Robinhood account. I actually do. I'm on the side that they do let it burn. This was the same rumor that caused the last bear market rally. And then the feds came out and said, hey, we've been telling you guys this whole time. Why do we have to repeat ourselves? We're still raising rates. Then everyone jumped off a cliff.
This is what we talked about.
Yeah.
Don, I agree with you. And if it was just quote unquote saving a bank, then I agree, let it burn. But the reason I don't think it will actually happen, even though I agree, if it's bad, let it burn, is because of all the pensions linked to that corporation and bank. You're going to let an entire generation of pension burn. And now what do we do with all these people that are older that have to go back into the workforce but can't because they were, looking for their pensions? I don't think politics is going to let that happen. I just don't. Whether you agree with it or not is out of the question.